Reduce your standards. No one's going to tell you this, but I'll be the one who's going to tell you this. You want to pass any challenge, reduce your standards. If you want to pass a $200,000 account, play with a $100,000 account, pass it, accumulate some capital, buy another one and another one. So the general rule is you want to play with a money that you're comfortable losing. If you're not comfortable losing, emotion will come and will dictate the result that you're going to have as in terms of outcome. If you have fear, greed, you're done. You don't have the edge. So make sure to play with an account that you're ready to lose. Once you have it, once you focus on the process and you're not focusing onto the outcome, well, then you're gonna have more chances for you to pass it. Then with that money, you buy another one and another one and another one, and then eventually you'll make it. Apex Payment, I'll see you next time. Welcome back everyone to Apex Payment. Today I'll show you how to pass your challenge in 1 to max 3 trade in a single position. And you don't need to have high quantity of trading. You just get, find those quality trades and then eventually pass your challenge. There's a way, there's a righteous way. You don't want to burn yourself. Trading should be effortlessly, but until you arrive there, you need to have a solid comprehension of what you do. Now, without further ado, we need to understand what's going on with the price, what's going on with the intentions. Right there, we had the moment of election, right? And then Trump got elected. We had a beautiful push here of around 1,000 pip. Then afterward, we had a beautiful healthy retracement. Okay, when I see a healthy retracement, bear in mind that it's all relative to what happened on the current market. So if I do remember, this was a beautiful 61.80. That's right. And let me just put it a bit more perfectly. Then afterward, we see the intention was to push toward the minus 100%. So 25.36. That was a beautiful, beautiful move. We're talking about a good 1700 pips. Then afterward, we had another beautiful push on the upside. That is not a retracement, obviously. The retracement wouldn't broke this level, neither this level as well. It could have just continued all the way down. But then again, you guys know market cannot just go one way. So we're approaching the end of the year, so there's balancing of the portfolio that is going on, and also that the 17 we had some geopolitical situation going on with Americans and Ukraine and Russian, and then they're talking about the World War III and those nuke and whatnot. All of this news make some uncertainty and shaky ground for many indices out there. So money pours into safe assets. Then after we had a good push of at least 1800. Okay, so this is where it's getting interesting. Okay, let's hypothetically put ourselves in this situation here where the Sunday 24th, we're gonna go on a daily and we're gonna erase all this right there. Okay, watch this. Stay comfortable and just stay focused, because I'm about to show you how to make an impeccable trade on one single trade and just literally pass your funded challenge. Now, put yourself in the shoes of retail trader first and foremost. You would see this, okay? You see this situation being broken, okay? This price, it is the level of 27.07. You see this as well being broken. So there's a lot of momentum, okay? If we put our fib level from here to here, we're in the middle of nowhere, okay? We're in the middle of 61.80, 78.60, and there's no major technical area. I mean, there's no key level, there's no support resistance, there's no supply and demand, nothing at all here. So you would assume, being there on a Friday, that this would have gone up at least to 36 or 31, and there's no major take profit area of a particular fib until Sunday. We're not going to go too much in detail, but the point is there's really nothing going on here. Okay, so you would expect this to go all the way up at least. Okay, so many traders would have assumed that it's going to be another all-time high. Okay, and if not, well, at least it would have touched this or this. Okay, let the dust settle. You need to relax, you need to calm down a little bit, because you need to see more information, because until then, I mean, who wants to enter here when you have all this as a downside? I mean, the risk to ratio is pretty terrible. And as a trader, you're not someone that's only speculating. You're a risk trader, okay? You're risk management. You need to wear all hats, and as a risk manager, I mean, it's the worst trade you want to take if you want to take it from here, okay, on a Sunday open. So afterward, what happened? And we had a little push toward 27.20, okay, it's a round number, and then boom, we see this. Lovely. From here on, you could have expected this is going to be a nice little retracement. Okay, this seems like the 61 as well. So the 61.80, but no, they went to touch all the way down. Okay, they pierced onto the 50 moving average of the daily. Okay, we've broken certain important zone, which is here, the small beautiful accumulation that lasted at least 16 hour, which is quite significant. Okay, this has been broken. Now that I know that, well, I mean, if you would have read the fundamental here, from there on, it was all noise. Trump is getting back to the office. Things are much more calmer than they seem to be. And there's no World War III. And there's also a balancing of portfolio, meaning there's a lot of liquidity grabbing. And so this here, this move, which is 500 pips, you know for a fact that this is going to go at least till here or here. Okay, these are the major zones of accumulation. That being said, what I want to do is go on a smaller time frame. I want to find where's my best entry. So the first fib, well, let's see here if it's the last move. Let them give a little bit more information, okay? Because usually when you have a price action that has been rejected, there's also another one that's going to form a double bottom or a little bit of leak, and then afterward go back up. So we're gonna wait. There we go. It's getting closer to the double bottom. So we're right on top of a Fibonacci. Which level is that? The 50%. Good. So this has been a good reaction. Are we gonna use this? Let's wait. If this hasn't been broken, this zone, we're not gonna place our fib yet. This zone. We'll wait. Voila. Okay, so you have here a leak. And now let's see what they want to do next. Are we gonna have the break? Yes, we do. Okay, so now I want to have this fib. And now the goal is to find an entry. Okay. From there on, I want to find an entry. I see few things. Now, you might ask me, how did you found this? There's no easy answer. Experience. I've been in the market for at least 4 years and a half. Many trials and error, and yeah. So you need to have a lot of experience. I see something special here. This key level. That is a very solid one. Beautiful. I see some moving average coming up to our downside, so we're going to go on a 15-minute just to see. Okay, so 50% seems to be interesting. 61.80, lovely. I need more Fibonacci's. I need more confluences. I need more precision here into my entry. So what I'm going to do, I will find the best fib level. I see one pretty special. So this fib. Again, you may ask me, how did you find this one? Again, experience. Trials and error, my friends. You cannot Google experience, okay? So you need to put in the hour. And if you don't, well, there's people like us that put in the hour and you stand literally no chance. This is a solid level that I see, the 88.60. I see one, the 78.6 as well. I will take this trade and this key level, and we'll clone it like this. Okay, because I wanted to have a confluence with my level that I like. So let's see, this is a lovely key level. So we're gonna go into 15 minutes. Okay, I want to have my trade basically here, right there. I will put my stop loss just on top of, the 88.60, if you guys remember, if you don't understand all the fib level meaning, you guys could watch the previous video that I've done on fib level. This is literally a last resort price, so I don't need to extend my stop loss. I like to have my tight stop loss, so I'm gonna put it just right on top of this here, this bad boy. Okay, I want to put it all the way here. And now, once again, if you may ask me why, well, this is a price that has been utilized pretty much a few times, so it's something that I want to bear in mind, and I don't want them to go all the way up here. And also we have the 88.60, and we don't have much structure, so let's just see if I go on it 3 minutes. I want to see more. Okay, lovely. I'll leave it there, right there. Perfect. 32. Now take profit. Hypothetically, you want to remember that if you have relative to an extension, you will also have the same extensive and aggressiveness of retracement. Now, this is considered as a retracement because we had almost like 1500 pips of the upside. So we are looking for where the retracement will stop, right? And based on just here that we had at least 600 pips of downside, well, I would expect something like this similar to that, especially, I mean, based on the price action, timing, and everything, you would assume that it's going to be pretty solid. And now I want to find my structures. So we're in a 15 minutes. So the first structure, obviously it's here. This is not going to be our take profit. Second structure will be there. And last but not least, right there. I want to see some correlation with my Fibonacci's. Let's see. Okay, so my take profit will be right there. This one here, I want to get out on a round number, so 20.4, whatever. We're going to keep it here. Now we have a 20-to-1 risk to ratio as a trade. So let's bear in mind here that we have few confluences. Okay, again, it's all about confluences when you want to enter on a technical level. Okay, so you have first confluence here, so you have a zone of demand, supply and demand zone right there. Okay, we have our moving averages crossed. We have our story and the headline of what's going on with the market, so the storyline. This is third. We have a Fibonacci level. Fourth, we have the bigger Fibonacci that is the 50% ish. I don't think it's gonna go there. It's gonna probably, you know, fake out till to maybe they're going to touch it. We'll see. So we have here 5. We have those key levels 6. I mean, you have 6 reasons to sell this. So that is the reason why this risk to ratio is amazing, and I'm going to take this trade. And that's pretty much the trade I have taken. Let's see now. Okay, this is a move of 670 pips. Okay, so if you had put a 2 lot size, you would have done $13,400. So that's pretty much the type of trade that you want to take, because you have one single trade, very low risk. You're risking literally almost nothing. It's almost like $600 to make $13.4 thousand. So let's just say if you would have risked $1,000 on this, obviously you would have higher your lot size. You would have risked 0.5% of your $200,000 challenge. You've already passed your challenge in one single trade. You would have put 3 lots, $20,000 on this trade, and the risk was 0.5% of your account to just pass your challenge. Let's see. So we have our break, and voila. Literally on dot. Now obviously you don't want this to be leaked. So you're right there, your trade has been executed perfectly. No spread could be against you as well. And the moment we broke the zone here, I will take my stop loss, make it break even, and absolutely no risk this trade. So make it even better. So we've done a sort of double top, and beautiful. That moment I take my stop loss, 0 pips of risk, and let's see for the take profit. So currently we are stalling on, well, one of those levels. Let's see, 15 minutes. The 32.20%. And what time we are currently? We are peak liquidity. Okay, so we're peak liquidity. Would you take your take profit here? Absolutely not. I mean, you're in peak liquidity. You've already done your homework. Let it run. You can take some break even, but it's really far from taking any break even here. The movement is really not done yet. So I'm gonna keep leaving this, which I did, and we're going on the downside, doing some small, beautiful, healthy retracements. What time we are? They start to go up a little bit. It's 11:40, still peak liquidity. Come on, push, 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 and voila, beautiful. You have your trade here. How long did it last? Lasted 6 hours. Was not difficult. Beautiful, healthy push. Let's see what's going to happen. And there you go. You have another leak. You could have taken more profit, but you want to go on a safer side where you go with what you understand. Then eventually, if you see some leak, go back to the drawing board and try to understand the reason why it had leaked even more. And so you get to better understand more, and you get to get better every single time. And the beauty of that is that you just pass your challenge. You made 20,000, 30,000, 40,000, 100K, whatever it is. Numbers are only numbers. What matters is your skills. What matters is what cannot ever be taken away from you, which is your wisdom, your preparation, your character, and your understanding. On this note, if you have any question, any suggestion, it'll be my pleasure to show you more videos like that. And I hope to see you guys soon. Take care, make a lot of pips. God bless.